What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to finish out this pullback as we see the market testing critical support. Will this bullish breakout retest be successful and will we return to a bull market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so just a quick recap, I want to throw up a picture of exactly what we talked about on Monday for this three-wave pullback to get a successful retest of the breakout of the moving averages. And if we are going to see a successful retest, we should break out, see the price action, take out the highs. We should regain the full bull trend, and that should be enough confirmation that we're returning to a bull market. So far, we're getting everything we needed to see for the pullback, so the next step is getting that bullish price action confirmation. So that's exactly what we're going to be looking for over the next few trading days. So fast forwarding to today's price action, you can see that we very clearly got that three-wave pullback, and it's basically going right back to where we expected, but we don't know that the pullback is yet over. So right now, even though the pullback did go to our destination that we were expecting, which was the confluence area of the 50 EMA and the 20 simple moving average, we don't know for sure that this pullback doesn't want to go lower and test a lower support level, which will of course be our lower support right around SPY 438. Now, in the event this pullback is over, we will start seeing a very strong bounce from here, and we need to start taking out these previous highs, and those levels will be SPY 458 and 462. And by then, we should have confirmation that we're back in the bull market. We should have the full bull trend. We'll have confirmation of a successful bullish breakout with the retest. And then we should go into a sustainable bull rally that could easily last 1 to 2 months. And of course, it could go much longer than that. So I know these pullbacks take a lot of patience because this is definitely a process that if you try to front run and you're buying too soon during these very impulsive rallies, you're going to regret it because you're going to feel like you bought at the top. And during the pullback, you're going to be wiggling in your seat, wondering if the market's going much lower and you just bought the high. Of course, nobody knows for sure, and I can't sit here and tell you that this pullback is definitely going higher. But what I can tell you is this is an incredibly bullish looking chart, and the price action was very clearly incredibly impulsive, which is definitely bullish price action. So anytime you see impulsive price action higher and then this three-wave structure lower, that is usually a very bullish setup, and we do want to see low volume selling. So as I said last night, watch the volume, because if we start slicing through support on higher volume, that will be a bearish development. What we want to see during the pullback is lower volume, and a lot of this volume today was actually buying volume. So while we did have a nice volume day, it wasn't all just selling. So keep in mind we did gap down overnight, so that doesn't really show up in the volume, but during the day we did get some decent volume buying, even though there was sellers on the other side as well. So right now, the number one thing I would pay attention to is the gap fill above, which is right around SPY 450. And basically when SPY gets back above 450, we will be looking a lot more bullish, but we won't really have confirmation that we're back on the bull until we get back above about 457 to 458. So watch those very critical resistance zones, and of course the most critical will be the break back above 462. So to the downside, we still have very strong support right around SPY 444, and below that we still have support right around 443 and 438. And as long as we stay above 428, we are still making a higher low, and this is still relatively bullish. But I will tell you, if SPY does start breaking down below 438, that will be a bearish breakdown, even though overall it could still just be a deep retracement before the bull market. I would like to see SPY above 438, and in the most bullish scenario, I would like to see SPY back above 444 and not break below this level. Also keep in mind, the market doesn't care what I think, and the market doesn't care what you think. So even though I'm giving you all of these scenarios I do think are likely to play out, you still need to put in the work and watch the price action at these critical levels, and you need to have a trading plan that fits your risk and reward ratios, and you need to use proper risk management. So while I'm sitting here telling you this is looking bullish, we don't know that it is bullish until we get the confirmation in the price action, which we don't yet have. So hopefully this is all making sense to you, and I am spending extra time going over it because I want you all to be successful, and I want to make sure you don't miss this next bullish rally if we are indeed getting it. So in the event this is going to be a bullish breakout and we are going back into a bull market, it will be very impulsive, and we will likely at least retest the previous all-time highs, and in some scenario we will even make a brand new all-time high. I know there's a lot of noise out there about the Fed and all of the things they're doing with the balance sheet and all of this other noise, But if you've been following my channel for any amount of time, going all the way back to the year 2020, we have always dealt with noise. We had plenty of reasons in 2020 why the economy was in shambles and the market shouldn't go higher, and we had the same exact noise in 2021, and the market just continued to go higher. So there is always going to be noise out there. There's always going to be bears telling you why the stock market can't go higher, and that is why we strictly stay objective and follow price action and trend. And right now, price action and trend are looking more bullish than bearish. That is why we have a bullish tone for no other reason. When the charts look bullish, we're going to be bullish, and when the charts look bearish, we're going to be bearish, and we'll leave it at that. Jumping over to the NASDAQ 100 triple Qs, we have the same exact story as SPY with the three-wave structure down, and now we just need bullish confirmation. So the most bullish breakouts from here will be back above 367 and then back above 372. And we do have a very nice gap down that we need to fill, which is right around 360. So right now on the triple Qs, just like SPY, we are successfully retesting the breakout at these levels, right around the 50 EMA and the 20 simple moving average, right around 351 to 355. If we can bounce from here and break out back above this 365 to 367 zone, we will have a nice trade to close this gap, and we will also start back into a bull trend, because as you can see, once this 20 simple moving average crosses back above the 50 EMA, we will have the full bull trend. Now to the counter side, if we continue lower and we start to see high volume selling, you want to get a lot more cautious if the triple Qs break down below 347, because below 347 we could see a much deeper retracement, and we will still have strong support at 340. So watch those very critical levels to the downside as strong support at 351, 347, and 340, with the most critical bullish breakouts back above 355 and closing the gap at 360, and then getting back above 367 and 372. And of course, we still do have a valid price target at triple Qs levels of 377. So at the very minimum, I would expect to see the triple Qs hitting 377, but by the time we hit that price target, we will have a full bull trend. So we could go all the way back up and retest previous all-time highs, or at least test our resistance trend line around 390. So yes, things are looking very bullish, assuming we do bounce off support and start to break back out above resistance. In the Dow Jones, we were down 0.46% today, and again, the same exact story as SPY in the triple Qs, so I'm not going to keep repeating myself. So far, we are successfully retesting the support levels, and the critical support are at 344 and 340, and if we start breaking below 340, you want to get a lot more cautious, with the bullish breakouts back above 346 and then 352, with price targets at 356 and the full gap close at 360. Remember that gaps typically get filled, and there's no reason to expect with the Dow Jones with bullish price action and a bullish pullback that we're going up there to fill that gap at 360 before we see more downside. On the Russell 2000 small caps, we were down 1.42% today, coming right back down to retest the breakout almost to the penny, right around 198.7. We did open a gap above, which won't fill till we get back up to 202.4, with the most critical resistance to the upside being at 204 and the breakout above 207, and we should be full bull by the time we see IWM closing back above 212. So watch that very critical downside support at 198, because if we do close below that, it's very likely we're closing the gap at 195.7. And as long as we can stay above that gap close and start bouncing from here, we should go back into the full bull trend, and we should see the small caps bullish once more. Jumping over to the Arkk ETF, we were down 4.63% today, and we did open a gap above that doesn't close until we get back up to 66.5, and we still do have the gap below at 54.7. And now that we're closing below 64, it's more likely that we're going down there to fill that gap. So watch that gap down there as long as Arkk is below 64. Otherwise, look for upside resistance right around 67, and we're bullish back above 71. Once Arkk starts closing back above 71, we will likely finally snap this bear market and start forming a bull trend. With the next confirmation, we're going back into a bull market on a close above 78. On the VIX, we were up 5% today with the VIX closing at 22, but overall the VIX was very bullish today, and it did exactly what we wanted to see. During the pullback, we expected to see a spike in volatility, but I told you don't need to be cautious about the spike in volatility during the pullback as long as the VIX doesn't close above 24. And as you can tell, we have a huge upper wick on this candle, so you can see the VIX clearly rejected that zone around 24, which is extremely bullish. Just as I told you, if you see low volume selling and you see the VIX below 24, that is a buy the dip pullback and not something to be scared about and not something to be fearful about. So right now, as long as the VIX is below 24 and we have the bear trend in the VIX, you should be getting extra bullish on this market unless the VIX starts closing back above 24, then you can start getting a lot more cautious. The next time the VIX closes below 20, we should be in a full bull trend, and the next breakdown in the VIX that will be bullish will be the close below 18. On Bitcoin, we're currently down 3.7%, and just like the rest of the market, we're getting the successful retest with so far bouncing off that 50 EMA, and we do have the full bull trend. From here, this looks like a screaming buy in Bitcoin to buy it off 43,000 because we do have a valid price target that takes us all the way up to about 52,000. So from 43 to 52,000 sounds like a damn good trade to me. So as long as we're above 43,000 on Bitcoin, I think you need to be extremely bullish. If we start breaking below 43,000, you can get more cautious. So this is an extremely good risk reward setup and not one you should be messing around with because you won't want to miss a 10,000 point move in Bitcoin, especially if you're catching the bottom today. So don't be afraid to take on risk when you know your risk is well defined. So set your risk at 43 to 42,000 and let it rip. On NVIDIA stock, we were down 5.88% and NVIDIA did come back down to that strong support at 244 and we are slightly starting to lose the bull trend. So we really need the bulls to start bouncing soon if they have any hopes of going back into a bull market in NVIDIA. We opened a huge gap above that doesn't fill until we get back to 258. So this is a bullish trade at least from 244 to 258. But don't forget we still do have a gap down there at 230. So we don't know which gap's going to fill first. It's a battle of the gaps. If we break down below 244, it's very likely we rush down there to close the gap at 230. But if we hold support at 244, you're getting a lot more bullish on a break back above 256. And then the next bullish breakout above 256 will be at 267. And the confirmation of the bull market will be the next time we close above 283. So watch those very critical resistance levels. And don't forget that if we break below 244, you need to be extra cautious that we're going down for a quick trip to 230. On Tesla stock, we were down 4.17% today. And we see Tesla did start to close that gap below, but that gap is not fully closed until we get back down to 1021. And we do have a battle of the gaps because we have another gap at 1087. Which gap will fill first is anybody's guess, but we do have the full bull trend and very bullish price action. And we can see extremely high volume buying. So I'll give all the benefit of the doubt to the bulls. So right now, what I would favor is that a quick trip down to close the gap at 1021, and then we start ripping higher and get the bullish breakout. From the bullish breakout, we'll need to get a close back above 1108 and then back above about 1147. And from there, we should retest the previous all-time highs and possibly even make a new one. So Tesla is still looking incredibly bullish as long as it's above 1,000 with very critical support down here at 960. On Apple stock, we were down 1.85% today, and Apple did open a gap above that doesn't fill until we get back up to about 174.5. So again, a very bullish setup as long as you're playing off support right around 170 all the way back up to fill the gap around 174.5. We have extremely strong support at 168, and as long as we're above 168, we're likely going to regain the bull trend, and we will have very bullish price action all the way back up to a new all-time high price target at 188, with resistance on the way there at 176, 179, and 182. So as long as we're above 168 on Apple stock, I think you need to stay bullish, and if we break below 168, you can get a lot more cautious because we will likely go through a deeper correction. On the financial sector, we were down 0.69% today, and we're very close to going into the bear trend. So if we lose this support level, we could see the financials getting into a little bit of trouble. Back above the 50 EMA, we're looking a lot more bullish, but so far we are still forming a higher low as long as we can hold up above this support level. On the industrial sector, we were down 0.78% today, and we are looking a lot more bearish with 2 days in a row closing below all the moving averages, but we do open a gap above that doesn't close until we get back up to 100. And if we can get back above the 50 EMA, it's very likely we're going up to close the gap at 106. On the healthcare sector, we were up 1.52% today, and the healthcare sector is still looking incredibly bullish with very bullish price action and a very strong bull trend. So at this point, it's only a few days away from closing that gap up there at 141. On the energy sector, we were up 0.59% today, but overall the energy sector is looking very weak as it consolidates in this triangle. So if it starts to break down below the 20 simple moving average, we'll more than likely lose the bull trend and finally see the correction in the energy sector. So jumping back over to the S&P 500, you can see this is a very successful retest so far, but this is not yet over until we get confirmation with bullish price action closing back above the highs and a confirmation we bounced off support. So while this is an incredibly bullish setup, it's not over just yet, and we're still sitting at support. So we need confirmation that we're bouncing off support and getting that bullish price action, which we could just be a few days away from. So watch the price action at all of these critical levels and try to block out the noise because of course there's always going to be noise, as I talked about in the introduction. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. If you're interested in learning more about Bank Trade Alerts or subscribing, you can find out more information by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.